Crypto is free falling right now. Bitcoin is under $40,000. We haven't seen these prices in months. So what the hell is going on here? Let's talk about it. Hi y'all, my name is Greg and I make videos about the stock market and options trading. Today we're going to be talking about the mess that is cryptocurrency right now. So we're going to talk about the catalysts that have sent cryptocurrency free falling, and then I'm going to be talking about my plans for what I'm doing next. But before we get into it, if you enjoy this type of video where I cover the latest crypto news, crypto drama, make sure to leave a like down below and subscribe if you're new to the channel. With that out of the way, let's talk about crypto. Looking at CoinMarketCap right now, the global crypto market cap, or cryptocurrency as a whole, and the value of every single cryptocurrency that exists is down by 17.64%. That's really bad. That's probably one of the worst red days that we have seen ever since 2017. Now, I don't know that to be a fact, but Bitcoin is down by 9.8%, Ethereum is down by 22%, Binance Coin is down by almost 25%, which is really tough to see because Binance Coin is one of my favorites, and then the almighty Dogecoin is down by 24%. If you bought into the recent rally, you're probably hurting right now and you're probably asking what the hell is going on. So there's a couple catalysts that we have to talk about. First is our boy Elon Musk. Elon Musk has started some real drama over on Twitter with Bitcoin maxis or maximalists, people that are all in buying Bitcoin and only Bitcoin. And this is because way back in March, Tesla announced that they're going to start accepting Bitcoin as payment for their Teslas. And this was a really great concept, but in actuality, people probably wouldn't be spending their Bitcoin in order to buy a Tesla because most people buying Bitcoin think the price is going to go up. So why buy one Tesla now when I could buy two Teslas in the future if Bitcoin doubles? This was really great for Bitcoin though, and it did sort of end up validating it as a currency since you can now buy an actual product using Bitcoin. And a lot of people thought that other companies would start to accept it as well. That is, until Elon came out and he retracted this, saying that Tesla has suspended vehicle purchases using Bitcoin. And the reasoning behind this is because they're concerned about rapidly increasing use of fossil fuels for Bitcoin mining. And people gave Elon shit for this, saying that they should have known this all along before they adopted Bitcoin. But Elon argues that energy consumption has been insane over the past few months. And if we look at his source, the Cambridge Bitcoin Electricity Consumption Index, or CBECI, I have this pulled up from March 24th when Tesla first accepted Bitcoin as payment to when they stopped accepting it for payment. The estimated consumption went from 138.75 terawatt hours to 149.63 terawatt hours. And if you're good at math, that's about 11 terawatt hour difference. Now that doesn't seem like a lot in the grand scheme of things. If we back up to about December, global consumption back then was below 100 terawatt hours. Now maybe Tesla wasn't paying attention at the time, I have no idea, but that's not the end of his argument. This Bitcoin maxi, Michael Saylor, probably Bitcoin maxi based on his profile picture with the glowing eyes, says that the estimated electricity consumption per the CBECI year to date increased 40% during the same period that the network grew 100% in assets, meaning that energy efficiency dramatically improved during this time. And Elon argued against this, citing three different sources. His first source showed that a private equity firm revived their zombie fossil fuel power plant to mine Bitcoin, and this was published on May 10th, so a little bit less than 2 months after Tesla started to accept Bitcoin as payment. And this shows that Green Ridge, a plant in upstate New York, is on the verge of ramping up its Bitcoin ambitions. They're planning to add 10,500 machines to their Bitcoin operations, and they're planning to use about 85 megawatts. And Elon's issue with this is because this used to be a coal power plant, but then this company actually switched to natural gas in order to run their operations. But natural gas is still a non-renewable resource. And you have a lot of companies that are probably going to try to extort whatever they can to hop onto this Bitcoin rally. And if that means using fossil fuels, they're probably going to do it. His second source exposed this even further, saying that some states are luring crypto miners to keep their coal plants alive. And this was posted on May 12, 2021. Now, this is the podcast, so I'm not going to have you listen to the whole thing, but this showed that just very recently, a coal mine incident in North China led to 1/3 of the Bitcoin network going down. So this coal mine alone has a lot of power in Bitcoin. And his last source is titled "How Much Bitcoin Comes from Dirty Coal? A Flooded Mine in China Just Spotlighted This Issue." This was posted on April 20th, 420. And this basically goes over what we just talked about with a coal mine blackout that halted less than no third of all of Bitcoin's computing power. This article also highlights US miners, the one from New York State that we talked about earlier and one in Kentucky, repurposing their obsolete facilities based on natural gas to supply cheap power that they cherish. This article concluded that Bitcoin spreads a carbon footprint bigger than Australia's and that the run-up in its price could triple the carbon dioxide that it spews out. So according to all of this data and all these sites, it seems to be energy consumption has gone up, and Elon Musk is assuming that a lot of this is coming from fossil fuels. And he has every right to assume so, especially with this event happening on April 11th and this announcement coming from May 10th. But is he right? That's kind of hard to tell. We're going to have to look at the next data that comes out from Cambridge. Last time it showed that 70% of Bitcoin's operations is done through renewable resources. So we should wait to see if this year's data has changed. But this is all pretty old news, and this probably isn't why cryptocurrency fell today. The main reason, probably why it fell today, was that China announced that they're going to ban financial payment institutions from cryptocurrency business. Now this is a major issue because there's 1 billion people that are living in China. And this is sort of similar to what we saw from India. India also has a 1 billion people population, and we saw sort of dramatic sell-off when that was announced too. But China seems to be taking this a little more seriously. They said that they are banning financial institutions and payments companies from providing services related to crypto transactions and warned investors against speculative crypto trading. They said that under this ban, such institutions must not offer any service involving cryptocurrencies such as registration, so you can't register a new account to buy Bitcoin, I'm assuming, trading, so you can't buy and sell Bitcoin, clearing and settlement, which is also related to trading, and this was confirmed by 3 industry bodies. Now, I'm not exactly sure how reliable this is because this is coming from CNBC after all, and they're not exactly the most reliable source for financial information. Just look at all the FUD on Tesla stock and now Bitcoin, it seems like. But they said that China's reasoning behind this is because recently cryptocurrency have skyrocketed and plummeted, and speculative trading of cryptocurrency has rebounded, seriously infringing on the safety of people's property and disrupting the normal economic and financial order. And that's sort of the whole point of cryptocurrency, to disrupt the financial order that's in place right now. We want to decentralize and get away from our country's currencies that are heavily regulated and instead use a cryptocurrency that they don't have major control over. But the great thing about this is that China, even though they banned crypto exchanges and initial coin offerings, they have not barred individuals from holding their cryptocurrency. So this means that people in China aren't forced to sell out of their cryptocurrency if they've already bought in. But the institutions must not provide savings, trust, or pledging services of cryptocurrency. So they can't offer you 8% APR like we're offered from BlockFi. And their final reasoning behind this is because virtual currencies are not supported by real value, the prices are easily manipulated, and trading contracts are not protected by Chinese law. But really, if you think about it, no currency, or at least any fiat currency, has any real value. The value of it is tied to the country that it belongs to, like the US dollar. The value of the US dollar stems from our trust with the government and the value that we assign that dollar. And the difference between the US dollar and Bitcoin is that the US dollar is inflationary, where you can just print infinite amount, whereas Bitcoin, you have a fixed amount at 21 million Bitcoins available. So this means that Bitcoin is going to become harder and harder to come by, similar to gold, and because of that, it should be gaining value. So Bitcoin is sort of seen as a store of value, and other cryptocurrencies actually have real use cases. The biggest difference between Bitcoin and a lot of other cryptocurrencies is that Bitcoin is based on proof of work, whereas a lot of other cryptocurrencies are based on proof of stake, and they have smart contracts. And those smart contracts allow you to do a whole lot of things. You can create apps with that, you can create exchanges, you can create a whole lot of things. So there is inherent value in proof of stake. We just haven't figured out how to value that yet. So to say that they're not supported by real value sort of seems disingenuous, but what are your thoughts on this? For me, I'm just going to be buying more cryptocurrency. I think this is a bunch of fun. It's probably just going to wash over. And over the next few months, cryptocurrency is probably going to start to go back up. My plans for this is going to be to dollar cost average while prices are still low, which they are right now. And the 3 cryptocurrencies that I'm most bullish on are Bitcoin, Ethereum, and BNB, or Binance Coin. So for each of these, I'm going to invest about $30 a week or $120 a month into each of them. So if this slump ends up lasting for a while and cryptocurrency prices stay low as they are right now, I should be able to load up on another $1,000 worth of cryptocurrency before the next bull rally. That's what I'm hoping to see, but we also have the crypto winter coming up where I'll probably be adding even more to my positions. Right now I have around $4,000 in cryptocurrency, which is about 10% of my net worth, and I'm pretty excited to be finally buying on this dip. I haven't bought cryptocurrency in a while over the last few months because it's been going absolutely insane, but now is a better time to buy than before. But of course, this is all just my opinion. Let me know what you think down in the comments below. Thanks for making it all the way to the end of the video, and a big thank you to all my patrons for the support. And if you want to join the Patreon for live trade alerts, one-on-one consulting, and much more, make sure to check it out down in the pinned comment below. And as always, remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.